Hello everyone, my name is Chris Titley and welcome to the Fintech Australia podcast. The Fintech Australia podcast takes listeners on a deep dive across the fintech industry in Australia, focusing on the challenges, opportunities and big stories our community faces. Let's get to today's episode. Hi, it's Chris Titley here, and today we've got Andrew Walker, CEO and co-founder at Nano. Andrew, thanks so much for being part of this podcast.
Yeah, thanks, Chris. Lovely to be here.
Now, today we're going to talk about the Nano Digital Lending Solutions mission to New York on Austrade's Fintech Landing Pad. But before we get into that, I'd like to the listeners out there to sort of understand a little bit about what Nano is and how it's progressing.
Yeah, thank you. Look, we're a lending technology company. We have had a slightly unusual journey, which is we started life as a digital mortgage company, writing mortgages ourselves as the lender of record. So actually putting credit to work. And it was a purposeful strategy to launch a product that was at a platform that was different to what others had in the marketplace, and prove that it works ourselves, iron out, in effect, the technology wrinkles, so that we could then become a pure play SaaS business and move down that path and that strategy. And that's the journey that we've been on. We executed the first bit, so we set up the lending business, built the digital mortgage product, built the payment rails, the treasury. We wrote just over $600 million worth of mortgages over the course of last year, and we sold that book and that business at the end of last year. And now we're a pure play SaaS company and leveraging the technology that's pretty unique that we've built to help other parties originate loans in a more efficient manner.
Fantastic. It's certainly been an area that has a lot of focus on fintech in terms of the improvement of the way mortgages can be done. So congratulations on that, and certainly the new iteration of the business. Now, we did talk about the Fintech Landing Pad, and you did participate recently as part of the program. I'd love to know a little bit about how you found out about it before we get into the nitty gritty.
Actually, do you want the real story of how I found out about it?
Well, we are in the Fintech Australia podcast, and I'm sure the listeners would love the real story. And maybe you can make up a little bit of a fake story too, and people are none the wiser.
All right. Well, I'll actually give you the real story because it's kind of amusing, and it's but maybe not the world's most glamorous marketing story. So there I was, looking at the conference that we're going to obviously talk about shortly, the Fintech Nexus conference.
Yep.
And I was doing some research online. I was looking at the Fintech Nexus conference and all the participants and who was going to be there and the speakers. And then I was thinking to myself, well, I wonder whether someday we should have a presence there. Not this year, maybe not next year, whenever it is.
Yep.
And so I thought, I wonder. Then I looked on the website and I saw Austrade sitting there as a participant. And I was thinking to myself, gee, that's weird. And so I couldn't. I saw this government-sponsored pieces, and so the reason that I spotted them is I was looking at the exhibitor's map. The big map. It's got hundreds and hundreds of booths in there.
Yep.
By complete coincidence, and this, by the way, everyone probably get a laugh at it. By complete coincidence, my mouse was hovering in the middle of the screen, and as it stopped moving, Austrade popped up. As the stand popped up. So the answer to how did I find out about the program? It was because I was looking at an exhibitor map of a conference, and by complete accident, the Austrade booth popped up, and I went, "Gee, that's interesting. I wonder what they can do for me." So that then started the journey of me reaching out to Austrade, finding the right people, and then I have to say, launching into the program, going through the application process, and look, what a fabulous process and program it is.
I was going to say that potentially it could have been alphabetical as well, and you think, oh, that's the first one that popped up as a sponsor. But then the hovering mouse story is certainly one which has probably changed the course and direction of the business. Let's go straight into the nitty gritty of flying over to the US. What did you get up to during that time?
Yeah, look, we We've worked in and out of the US for a while, just on some pilots, and raised some money out of the US. So we know the market reasonably well. We landed there, and the program, I thought, was really well structured around giving people the flexibility to manage and deal with the networks that they've already got, and then set themselves up with current contacts, but also layering in a fair amount of rich structure on market entry, around marketing, legal structures, what works, what doesn't, language, nomenclature, culture. So it really was quite an interesting grab bag of items. Now, if you've worked either in the States, have a presence in the States, or have lived or worked there before, a lot of it is content that you probably have already covered. But what I found that I'm in the States on and off for a few years, but what I did find is that every session was really rich, because oftentimes just being reminded of things when you're not living in a country is of real value, Chris. So,
yeah, absolutely. And just that sort of, I remember that, and the reminder of what is current, what is going on, because you do find yourself in a little bit of a bubble here.
Yeah, you do. And it's the reminder of things. And a really good example would be in communication, you naturally evolve back to a style that fits the country that you live in and the people that you interact with on a more frequent basis. And that's certainly true with how we interact and what I see on a daily basis. But then when you're emailing, communicating, or texting with people in the US, everyone says, sometimes they're a little bit more abrupt, and we all laugh at it and go, yeah, that's the caricature, and we get it. But when you're actually interacting full on with lots of different parties over the course of that really intensive week, you end up with these conversations which start with, who are you? What have you got? And how can you help my business grow?
Yeah, which here would be like a bit of a taken back, I suppose. Yeah,
correct. And it sounds obvious, and it sounds like a trite point, but you actually really do need to be reminded of it every so often. And I found that the landing pad courses across all of the different topics that I mentioned were, I think they did a really good job of rounding out the program, so giving you a 360 view of all of the issues. So for us, our market entry strategy to the US is what you would call pilot-driven opportunistic, right? And so the standard logic for opening a presence in a new market, and this is true for all of the programs that I've seen, is one, you need to have a presence on the ground. You need to have a local trading company. There's all this infrastructure
behind the scenes, which makes it a little bit, I suppose, tedious and arduous to people to go, I don't know where to begin.
Correct. Yeah, and the program did a good job of outlining, all of the various things you need to do. You need a Delaware Co, and there's all of this infrastructural stuff. But what it did, interestingly and counterintuitively for me, was reinforce that, in some respects, ignoring a lot of that advice for us was the right thing to do. And let me unpack why that seemingly ironic comment works. So we work in the enterprise software space. So our decision algorithms and platform sit right in the core of the big economic engine of a business, of a bank, right? So it's not a payment switch or a marketing platform or a customer engagement platform, it's not something that sits as a bolt-on out on the outside of the franchise. It actually sits right in the core of where risk and economics sit for a bank. So our sales cycle is quite long, and our contract values are quite high. So our strategy has been, and it's just about to pay off, has been, let's use networks. Don't worry about having a local presence. Don't worry about having people on the ground, and just retrofit all of that once you've got a pilot and a client, because that pilot and client will be large enough to be able to sustain the infrastructure anyway. So for me, it was a really, really good way to challenge our strategy. Now, by contrast, if we were a marketing or a customer engagement platform and we're selling smaller contract values, just by way of example, over many clients, then the strategy that we're following would make no sense whatsoever, right? Because you need to get to 50 clients and have 50 to 150 to 200 meetings to get the sales going. And you can't do that remotely. We need to get 2 or 3.
Yep.
And so for me, it was a really good way of listening to the logic and actually challenging that, given the way that we contract, and feeling like we're probably, hopefully, on the right track. And I think if we talked to all of the other participants that I did over the course of the week that we were there, they were doing the same thing. They were challenging their strategy and actually honing it real time. So that's where I found there was a lot of value.
And Andrew, obviously being over in the US, we hear of so many banks over there compared to Australia, and things like the long-term fixed mortgages. What did you see in terms of the US market compared to the Australian market?
Yeah, look, it's very much the same and very much different, right? So just from a size perspective first, what's really interesting is there are 2 numbers that are really meaningful when you look at the banking market. One is stock, the total number of loans outstanding, and then one is flow, how many loans are either refinanced or written on an annual basis. And the stock in the US is 25 to 30 times the size of the Australian stock. Just,
Wow. Yep.
Probably a function of the middle of their country is actually habitable, not a big desert. There's just a lot more stock. On a flow perspective, however, the market's only sort of 8 to 10 times the size of the Australian market. And that's a function of a lot of their market is 25 to 30-year fixed rate loans, which obviously we don't have here. And the impact of that is the market, when it's slow, when it goes hot, it really, really properly goes hot. But when it goes cold for a long period of time, right? And so over the course of the last 2 to 3 years, a very, very, very large number of people in the US fixed their mortgages for 20 to 25 years at 2 to 2.5% interest rates. Now they're not going to be thinking about what they do with their house and their mortgage for 20 to 25 years. The only thing that's going to trigger any lending consideration is if interest rates drop below 2 to 2.5%, which is basically zero probability. Or they have to move locations for their job. Basically, they have to move house. So, and the bright piece in that rather dismal story for a lender is the mobility across the US is much, much higher than it is in Australia. So people move for jobs
and college and universities and schools, etc.
Exactly. And so it's not all doom and gloom. Otherwise, basically, the mortgage industry will be dead for 20 years, right? So that's one the difference. Look, the structural difference in the US market is also quite fascinating because it's the only country in the world where the distribution of banking is not log normal, meaning it's the only market in the world where you don't have 3 to 4 to 5 players that have got 80% of the market share and then a long small tail. Every other country in the world has that banking structure. The US has the exact opposite. So they've got sort of 3 to 4. Well, they've got 3 to 4 systemically important banks. This is your Wells Fargo, JP Morgan, Morgan Stanley, and they are in effect government guaranteed, but they only make up somewhere around 10 or 15% of the market, not 80% like it is here. And then this long tail of 10 to 15,000 regional banks make up the bulk of the market.
Unbelievable. All at a local level.
And that's so the question then is, why is that? How did that happen? Why is that important? And what are the implications, right? So how did it happen? It was a function of what they call the Great Western Expansion in the US. So everyone knows, US history. They landed on the East Coast and then migrated west, right?
Mm.
And that's the Western Expansion. As the Western frontier started out on the East Coast, right, and just kept progressively getting out towards, cowboy land. But every new frontier town, as they headed out west, had a bar, a brothel, a sheriff's department, a bank, and some horse stables, right? Those are your 5 pieces of infrastructure.
Yep.
And I'm not joking. Those are your 5 pieces of infrastructure, just like in the movies.
It's like the UK is like a pub on every corner.
Yeah, it's like
a real estate agent.
Yeah, and so every town, the next 10 miles out as they rode, and someone put a flag down and said, "This is the new town," had those 5 pieces of infrastructure, and each one of them was a bank. And so consequently, across the whole of the US, there's tens and tens of thousands of banks, because every single one of those is either in a town by itself or in a county or in a state if they've rolled up. And so they just haven't amalgamated same way that they have in the other parts of the world. The other parts of the world started off as like the UK, for example. The big banks were there to support export trade and merchant shipping, right? And so they were concentrated in London, and there were a few of them that had all of the market. So it's really fascinating the way that the country grew up. Why is that? So that's the history. Why is that important? It changes your sales cycle. And so if you're selling into financial services and banks, you need to figure out a way to get efficiently to 10 to 15,000 players, not 5 to 10.
Yep.
So your sales cycle, your whole marketing, your collateral, everything has to change. So that's for people that are thinking of entering. You need to turn your mind to mass distribution, boots on the ground, communication, all of that stuff. That it's very, very different and a very unique market globally. And then what's the implication? Like the implication is you need to resource up differently. You need to figure out where the buying groups are. So credit unions, for example, all buy through 3, in effect, buying unions. And then one of the big hacks from the week away was, if you're wanting to sell to these large credit unions, by the way, they're bigger than half of our banks here, most of them.
Wow.
Then you need to go through the buying clubs rather than trying to get to the banks themselves, because you just can't get around 400 credit unions in the Midwest. But you can go and meet
knocking on each door. Yeah. Yep.
And look, that's just as an aside. That's why the Silicon Valley Bank and First Republic issue was a near-death experience for the whole of the US financial infrastructure, because Silicon Valley Bank and First Republic were 2 of the more well-recognized and larger players. They were closing in on top 10 players. There's 15,000 smaller, less well-capitalized, less well-governed banks with money sitting in their deposit accounts from customers that are behind those 2 that had to get bailed out.
Yep.
So, the contagion could have actually decimated the entire tail of the banking system, which in Australia would be, 20% of the market. But in the US, that's 80% of the market.
The other way around. Yeah.
The other way around. So it was actually, if you understand the structure, it was actually a really, really significant issue.
Yeah. Yep. Now, talking about the actual Nexus conference in New York, where you hovered over the Austrade mouse, did you end up going to the Austrade pavilion or booth there in that conference? And tell us a little bit about that conference.
So we did. So the agreement, the understanding, or the approach, I'm not sure which one it was, frankly, that we all took was the Austrade team put all of our logos up, displayed around the Austrade stand. So the way to think about it, Chris, is if you're wanting to dip your feet in the water and get a presence at that Fintech Nexus conference and not spend the quite reasonable amount of money to actually set
thousands and thousands and thousands. Yep.
Yeah, they're a lot. Then you can get the presence at the show, actually participate in the sessions that you want to, the social functions and the networking without having it. Basically splitting the cost. And the Austrade team in effect become leveraged infrastructure of your business. Because if you're walking around meeting people or attending sessions, if someone comes up to the stand and wants to have a meeting with you, the Austrade people cover for you and then schedule the meetings. And
wow, excellent. Yeah.
So, I mean, frankly, I think they've just done an incredible job, because, as a startup or a scale-up business, what you're looking for is leverage and access, right? That's really what you're looking to do, is get leverage and access into a market where you've got people that have got the expertise, the networks, and can actually help you out, rather than just, make introductions, actually do the work. That makes a big difference.
Brilliant, mate. Excellent. Well, Andrew, thank you so much for sharing your journey over to the US, and including that Fintech Nexus conference and the involvement that Austrade had in it, and also the lessons and learnings about the intricacies and potential international expansion, as you mentioned earlier on in the podcast. Looking forward to catching up to Australia's version of the Fintech Nexus Intersect coming up in late August, and really looking forward to catching up in real life and having a yarn about Nano.
Absolutely, mate. Thank you for the opportunity. Nice to talk to you.
Thanks for listening to the Fintech Australia podcast. I'm your host, Chris Titley. The Fintech Australia podcast is a collaboration between Fintech Australia and Sub11. For more information about membership options, news and the events coming up, jump on to the Fintech Australia website. Have a great day. Thanks for listening, and we'll catch you next time.